Hello, and welcome to myfinanceteacher.org. Here's another update on a range of markets. We're going to talk about mainly the general stock market and, of course, the precious metals, gold miners, and today we're also going to look at silver. It's not that often that I actually look at silver with you, so that might be interesting and possibly useful over the next few weeks. But first, we're going to start with the general stock market. So yesterday, on Monday, stock market continued to go higher, even though, as I mentioned to you in my personal trades, I sold out of my SPY position at 311. Right now, SPY is actually at 323. And as we mentioned in yesterday's video on gaps, we have this gap on SPY somewhere between 313 and 317. I still think there is a good chance that this gap might be filled probably over the next couple of weeks. So I sold out of the position, and even though S&P500 keeps going higher, I don't really want to get back in and chase for a number of reasons. Firstly, we see multiple pokes through the upper range of the Bollinger Bands. That tells me that S&P is getting a little bit overheated. We also see that 14-day RSI is into overbought area. It's nearly at 74.5. So it's getting a little bit hot. And the ongoing short-term daily cycle is at day 25. These cycles usually last for a couple of months, so it's still possible that this cycle continues for another even couple of weeks, let's say, bringing S&P much higher and giving a lot of grief to me for selling SPY at 311 before turning back down. But anyway, in either case, this cycle is not extremely young, and I don't want to jump into that cycle at the moment. We've had really good gains since late March over here, and I'm pretty happy with what we have. And some more reasons for why I think that gap might actually fill and why I don't want to jump back into the general stock market is this fear and greed index. It's at 68. Last time we looked at it, it was at 66. So the general investors are not extremely greedy at the moment, but they are pretty greedy at the level where, again, I don't want to chase the markets, having sold just recently a few days ago. It's often the case that the markets top at the fear and greed index somewhere between 70 and 80. We're now at 68, and there is a danger of possibly turning around and continuing down pretty soon, especially looking at futures. Before the markets open, we can have a look at what's happening to the futures, and we see that today the markets are already on the futures. The markets are already nearly 1% down. So is it going to be the start of that decline that brings S&P 500 down over the next couple of weeks and fills this gap, as well as the gap on SPY? I guess time will tell, but that's just another indicator of why I don't really want to chase. Moving on, this is dumb money versus smart money confidence on the general stock market. The red line here is the dumb money confidence. You see that usually whenever dumb money confidence is at the bottom, when everybody is afraid of buying, that's the good time to buy. When there's blood on the streets, that's the good time to buy. At the moment, dumb money, the general investors, individual investors, are very excited. They're really confident, but that's exactly the time when you don't want to chase the markets too much. If you didn't sell with me when SPY was at 311, I congratulate you. SPY has reached 320 and above. But in that case, you possibly want to have a relatively tight stop losses so that these extreme levels in fear and greed index and the confidence of the dumb money doesn't really turn into substantial losses for you. Another interesting indicator here is American Association of Individual Investors. As we see here, those individual investors are most scared when it's the time to buy, and they are most confident when the markets are far from the lows. The individual investors are coming close to neutral levels. So again, there is a chance that S&P just continues higher, giving me some pain for selling at 311 on SPY. But again, we might see a decline in S&P over the next couple of weeks, possibly because this cycle is close to the midpoint. That's on the general stock market. Let's move on to precious metals, gold first. We see gold bouncing over the last couple of days. And there is a chance, the chance is not extremely huge, but there is a chance that this second daily cycle on gold has finished a few days ago. That's on the 5th of June. That would give us a short-term daily cycle lasting for about 35 days. That's a little bit on the short side. I probably would have liked to see this cycle continue for another few days, as I indicated earlier. But there is also a chance, as I said, it's just finished a couple of days ago on the 5th of June, possibly starting our third daily cycle, the rallying stage of that third daily cycle. So let's see what gold does as the markets in the US open. If the strength in gold and particularly gold miners persists, then I might actually get back into some of those miners. So stay tuned for that. For some indicators on gold, RSI recently has dipped into 43. That might actually be deep enough for short-term daily cycle. The intermediate cycle itself, it's 81 days old. It's still under 3 months old. Usually these last for about half a year. We're already getting into the mid-range of that cycle, and there is a chance that the bounce up in gold into that rallying stage of the next short-term daily cycle might not be that strong. I still have hopes that we might see gold possibly retest 1800 over the next few weeks. Let's see how it goes. But looking at more indicators for gold, this is the optimism index for gold. Looking at a history of 2.5 years or so, in summer of 2018, optimism index was much deeper into pessimistic area than we are at the moment. So you might say that there is a lot of potential to see much lower gold prices as the markets are not as scared as they used to be, let's say, in summer of 2018. But on the other hand, if you look at more recent history, especially with trillions of dollars printed by the central bank, in more recent history over the last year or so, the optimism index hasn't really dropped that much into extreme pessimism. So the current levels, close to neutral levels, again, might be deep enough to produce another bounce into some excited levels before the intermediate cycle decline probably gives us more blood on the streets and a better opportunity to re-enter into precious metals. Now moving on to miners, GDX. Again, over the last couple of days, we see some small green candles on GDX, and we see a gap on GDX mentioned yesterday as well, somewhere at about 33.8. So again, over the next several hours, if the strength in precious metals persists, I might actually get back into holding some GDX, as the optimism in GDX is actually pretty low at the moment, again indicating that we are pretty close to at least a short-term low, and a possible bounce over the next couple of weeks is likely. Talking about getting back into that GDX allocation, this time around I might actually have a slightly smaller allocation in GDX, as I might actually have slightly bigger allocation to, say, silver. I might actually add to my silver positions in addition to buying some GDX. Again, stay tuned for that. for the updates at myfinanceteacher.org. But the reason I think it might be interesting to get into silver over the next few weeks is that, as we mentioned in some of the older videos, that was probably a few weeks ago, silver tends to catch up with gold somewhat later in the intermediate cycle when the general investors feel a little more confident that, oh yes, the precious metals are now doing fine. Looking at gold chart itself, it's already blew past its previous year's summer highs, whereas silver is still below the highs that we saw in summer of last year. So silver is lagging here. Some of the resistance levels on gold, if gold goes up to, let's say, 1,800 over the next few weeks, that would give us something like 5.2% gains. Instead, on gold, some of the resistance levels above the current price would be these highs that we saw at the beginning of this year. That's somewhere at about $18.8. That's already a 6.7% gain from current prices. And the next resistance level above that is this summer of 2019 high. And that is at about $19.6. That would be 11% gain. Plus, if we compare current price to longer term averages, let's say this 200-day moving average, silver is not that far above its 200-day moving average. It's not too much overheated, and RSI is not into overbought area, although it's dipped into overbought area a couple of times over the last few weeks. Whereas on gold, we see that gold is pretty far above its 200-day moving average. So if there are some gains in precious metals over the next few weeks, the gains might be more interesting on silver rather than on gold. So there is a food for thought for you. For now though, I wish you a nice day and good luck in your trades.